Hey viewers, you're watching the Savera and I'm Vidhi Joshi. Loans are expected to become more affordable in the coming days as the Reserve Bank of India has announced a reduction in the repo rate by 0.25%, bringing it down to 5.25%. This decision was taken during the Monetary Policy Committee meeting held from December 3 to 5, and RBI Governor Sanjay Malhotra formally announced the move on December 5. The repo rate, which is the rate at which the Reserve Bank lends money to commercial banks, plays a crucial role in determining the cost of loans for consumers. When the RBI reduces the repo rate, banks can borrow funds at a lower interest rate, and this benefit is generally passed on to customers through reduced lending rates. As a result, loans such as home loans, auto loans, and other retail loans are expected to become cheaper by up to 0.25% in the near future. For borrowers, this brings immediate relief as the EMI on a Rs 20 lakh loan with a 20-year tenure will reduce by around Rs 310, while the EMI on a Rs 30 lakh loan will decrease by about Rs 465. Both existing borrowers and new applicants stand to gain from this move. The reduction in the repo rate is also expected to stimulate housing demand across the nation. Lower interest rates make home loans more accessible, encouraging more individuals and families to invest in property. This increased demand is likely to give a boost to the real estate sector, which often responds positively to rate cuts by the central bank. With more people considering home purchases, developers and related industries may also experience increased economic activity, contributing to the overall economic growth. This latest rate cut marks the fourth reduction in the repo rate this year alone, resulting in a cumulative decrease of 1.25%. The first cut came in February when the rate was reduced from 6.5% to 6.25%, marking the first such decision by the Monetary Policy Committee in nearly 5 years. This was followed by further reductions of 0.25% in April and 0.50% in June, leading up to the most recent cut of 0.25%. These successive reductions reflect the RBI's effort to support economic recovery by making credit more affordable and increasing liquidity in the financial system. The repo rate serves as one of the most important policy tools for controlling inflation and managing economic stability. When inflation rises, the RBI typically increases the policy rate to discourage borrowing and reduce the flow of money in the economy. On the other hand, during periods of economic slowdown or financial stress, the central bank lowers the rate to encourage borrowing and spending. The Monetary Policy Committee, which makes these decisions, includes 6 members, 3 from the RBI and 3 appointed by the central government. The committee meets every 2 months and for the fiscal year 2025-2026. 6 meetings have been scheduled, with the first held from April 7 to 9. That's all for now. Stay tuned to the Savera for more updates. Do like, comment and subscribe to the channel.